Welcome back to the channel and welcome to this video. Today we're going to be talking about ETFs. It's something that was brought up in a previous video of mine to do with passive income, and I've actually been asked by a few people to explain kind of in layman terms, which is probably as much as I can go into the details of them, about what ETFs are. Now, a gentle reminder, everything you're about to hear is for entertainment purposes only, and it is not financial advice. I am not a professional. I'm definitely not a professional in most things. I'm definitely not a professional when it comes to finance, but what I do know is the things that I have learned, and I would like to share those with you guys as well. So when it comes to first-time investing or people that have not invested previously, ETFs are one of those things that are mentioned as one of the safer options or the easiest options when it comes to starting to invest. But what exactly is an ETF and what does it stand for? And also, why should you be interested in the first place? Well, an ETF stands for Exchange Traded Fund. That probably doesn't clear things up for you, does it? No, a fund is where you put together multiple different things in one lump, in one fund. And obviously the exchange traded part of that means you can buy shares of this fund through the stock market. Now, one of the most popular funds or ETFs that you can get is the S&P 500. And what that means is that in that fund, they have all of the top 500 companies in the US stock market put together as one fund. And then you can buy a share of that and obviously share in that profit. The reason why this is more beneficial or easier for first-time investors is that it does a lot of the hard work for you. And by that I mean you could physically go out and buy all 500 shares from every top company in the US. But at the same time, that often comes with a cost at the same time. Every transaction you make costs money. And now, yes, there are a lot and many different commission-free trading applications, so it would allow you to do that. But I looked into this, and the fact is, when it comes to ETFs, they balance those funds, so you don't have one particular share of everything. It's automatically balanced to produce the best result for you. And let me go back a step. So you want to invest in the stock market, you don't know which stocks particularly to buy. Where do you start? And that's where the ETF becomes something that's quite an easy option. You have another party that has gone off and put together all the top companies. They've lumped them all together in one, you can see like here, and you can then go, well, I'll buy a bit of a share of those. This means for you personally, you can profit in those companies going up or down. And the key part is the down part, and this is where it mitigates some of that risk for you. Because as you have 500 different companies lumped together, if one company does go down by 5, 6, 30%, you've got another 499 in there. And so that really does mitigate your risk for some of the real downs that you're going to get. And that, again, makes it much more of a sensible, safe option in the long term. And historically, the S&P 500 has performed well. On average, I think over the last 10 years, it's had a return of about 13.5%, which is incredibly good, especially if you're looking for long-term growth of your wealth. And again, this isn't going to be the next thing that's going to just take off and you're going to get 100% growth year on year. But that's an unrealistic target anyway. If you're looking to invest, it should be to increase your future wealth. Nothing's going to make you rich overnight, and that's the important thing to understand. Investing is about future wealth generation, so it's an aspect that's better than saving. The simple fact is, picking stocks is hard. You can go out and you can say, I'm going to buy these stocks. You don't know whether they're going to be good or bad. So trying to pick the next thing that's going to go up by 50, 60, 100, 1,000% is pretty difficult. But by buying into a fund like this, helps you grow your wealth over time. There are lots of different options for funds as well. So you can buy ETFs in lots of different markets. You can pick things like green technology, emerging markets, and there are a whole selection of funds that you can buy into. The S&P 500 is the most popular, mainly because it is made up of the 500 biggest companies or the 500 top companies within the US, which are well-traded companies. So they're kind of, again, when you look at the track records of these, they have been performing quite well over the last 10, 20 years. When it comes to other things, if you'd like to explore new technology, clean technology, anything like that that you specifically would like to buy into, again, it's another way of you getting into those markets and mitigating some of the risk. They are more risky than the S&P 500 because of the different technologies that are in there, but it's not as risky as just picking your own stocks and trying to pick the next top green company. And these funds, like I said, they're automatically rebalanced by the people who manage them. So one of the biggest you can find, especially for UK, is Vanguard. So Vanguard will automatically do this. So Vanguard will automatically rebalance. And rebalancing means that they allocate the number of shares that they buy within this fund for each individual company. You know, you might have 10 of Google or 10 of Tesla or whatever it might look like, and they automatically rebalance it to create the best outcome for you. And the thing is, with Vanguard, they do charge a fee for this as well. You don't see that, it's just a part of the fund itself. So if you were going to manage the fund yourself, you wouldn't have this. You would buy each individual share. But at the same time, that takes a lot of work, and you don't want that. The thing that you want, you're a new investor, you want to come in and say, I want a better way of saving my money that doesn't involve me doing a lot of work and is better than saving. And that's where an ETF is brilliant. That's where an ETF, and I think everyone should have ETFs as a part of their portfolio. And I'm talking to some of my friends close to me now and family and saying, like, they're very much of the old school mentality where they think that saving is better than anything else. It's more risk averse, but saving doesn't create that future wealth. The beauty of the ETF is the fact that you can put your money into something for the long term. This year has not been a great start for the market in general. I think the market is generally down about 8%, so that's not ideal for a start of the year, but I'm not going to be checking my portfolio every single day, and nor should anyone else. So the way I look at it is that things are on sale now, and that's a good way to look at things. So I invest in my ETFs every single month, and I will continue to do so because this for me is a long-term thing. I'm looking at this for my future retirement, and hopefully this leads to my early retirement. I have my pension, but I also know that that isn't enough. A lot of people, especially young people today, don't put enough value in looking at their future and their potential retirement. I'm pretty sure that no one wants to be retiring when they're 75, and they're probably not looking too much into what their pension looks like as a young person as well. So this is a way for you to create a valuable pot of money for your future. Like I said, the returns are good on these in the long term, and it is a sensible, easy way to create some future wealth. That means for you, you can have something in the future that will benefit your life from a small amount of money. If you'd like to get into ETFs, or if you'd like to start trading and you haven't, check out some of my other videos on, for example, the BUX app is a very easy way to get into investing, commission-free trading as well. You can buy into ETFs through BUX. There are other links that I will put in the description as well. I would very much recommend starting to look into investing in general if you've never done it. It's never too late. Of course there is risk with anything like this, but at the same time, when inflation is so high like it is now, there is equally risk in anything. I appreciate you listening. Hope that's helped you understand a bit more about the mechanics of an ETF. I'd love to hear your comments, feedback, anything like that. Drop me a comment below. And if you like this sort of thing, don't forget to subscribe, and I'll be coming back with many more different videos like this in the future. Until then, peace out and have a great day.